Okay, so now we're going to move into the limited benefit products. Okay, we've covered ultimate preferred, we went then to super preferred, then standard, then from standard to standard 20 pay. Okay, and now we're going to move into something that you will see probably nearly 50% of the time that people qualify for, which is going to be the limited benefit plans. All right. And so with limited benefit, and let me go back, and obviously with any of the plans that we've discussed up until this point, ranging from ultimate preferred to standard, once that policy is paid, issued, and in force, it's day one effective. Okay, so that's an immediate, just like we said, immediate plan. It's going to pay that death benefit in full to the beneficiary. Well, with limited benefit, obviously there's a limit there. Okay, and so if they don't qualify for standard, the next plan type they're going to qualify for is going to be modified. Okay, and with modified, you're going from 1,000 face amount in coverage to 15,000. So 15,000 is as much as they're going to be able to get. So 1 to 15,000. There's no restrictions for tobacco usage or anything like that. And if they were to pass away in year 1 through 2, so year 1 or year 2, if they, God forbid, if they pass away during the first or second year, policy year, it will not pay the full death benefit. So if they've got $5,000 in coverage or $10,000 in coverage, they're not going to receive the full death benefit. The insurance company there is mitigating the risk, obviously, because they got some significant health issues, and financially, life insurance, like anything else, obviously is a business, and they have to be able to have at least 2 years of premium from an actuary underwriting standpoint for that to be able to feasibly to make sense from a financial perspective to be able to pay out a full death benefit. Again, this is standard practices with any limited benefit plan in the insurance industry with any company that you would represent. So, but what it will do is it will pay, if they die in year 1 or if they die in year 2, it's going to pay to the beneficiary every premium that they ever paid in, okay? Every premium that they ever paid in, plus 10%. So it's going to pay 110%, okay, of all premiums that was paid in. So the family's not losing anything, okay? As a matter of fact, again, they're earning back 100% of everything they paid in plus 10%, okay? But they're not collecting on that full face amount, all right? So with modified, that's some folks that's got some moderate health issues there. They're not going to qualify for day one effective plan. They got a 2-year wait, might as well say, okay? But it will pay 110% of all premiums paid in. If they don't qualify for modified, then your last 2 options that your Slice app's going to give you is easy issue and what we call GI, guaranteed issue, okay? And virtually one and the same. Senior Life first had an easy issue plan and later added a guaranteed issue. They've not removed the easy issue plan. My advice to you is don't even worry if you're left with nothing but easy issue and then guaranteed issue. Just go straight to guaranteed issue. I personally have never written an easy issue policy. I'm just trying to simplify things to make your life easier. So if that's your only 2 options there, go straight to guaranteed issue. There's going to be no health questions, okay? And the only difference between that and the modified plan, okay, because then this is guaranteed, this is people with serious health issues that with most other carriers anywhere in the nation, they would not be able to get any life insurance. So this is a great benefit for us. You never have to walk away from a sale with Senior Life Insurance Company. Okay, it's a blessing. It's great. There's still money on the table. There's still a commission to be made and a family to be helped. Okay, if they need coverage, do not have it, or need additional coverage, and no other company is going to cover them. So the only main caveat, the only main difference between the modified limited benefit plan and the guaranteed issue limited benefit plan is that instead of a 2-year wait, it's going to be a 3-year wait. Okay, if they pass inside of year 1, 2, or 3, it's going to pay back to the beneficiary 110% of every premium paid in, but will not pay the full death benefit. So that covers the whole life plans with us with Senior Life. and of course break down on that from the immediate benefit to the limited benefit. So now what we want to talk about for just a minute is actually the term life product, okay? And with term life or senior life, you have a 20-year term, and then you have a 20-year term return of premium, okay? And we'll start with a 20-year term, and that's dealing with a minimum of $10,000, but goes up to $50,000, okay? This is going to cover them for a 20-year term of time. After that 20 years, with the standard 20-year term plan, they were covered for that 20 years, but they get nothing back at the end of that, okay? And so, you see a lot of times younger people carry term. Term is less expensive, okay, as far as the premium is concerned, so people can get more coverage for less premium. What you're dealing with there on issue ages is it starts with age 20. So if they're under age 20, okay, with all the whole life products, we're covering ages 0 to 85. Well, with term, we're covering age 20 to 65. Okay, if they're over 20, they can get it. If they're under 65, and they can get it, all right? But remember, they're going to order medical records on this before issue. So this is not going to pay you nearly as quickly as all the limited and immediate benefit whole life plans with senior life. So again, maximum face amount of $50,000, minimum face amount of $10,000. They can get any amount in between there. Well, then when we go to the 20-year ROP, the return of premium, what you're dealing with there is if they're not a tobacco user, okay, ages 20 to 60, okay, so it's a little different than the term, ages 20 to 60, over 20, under 60, they can get return of premium, unless they're a tobacco user. If they utilize nicotine, okay, tobacco, then they're only going to qualify for ages 20 to 45 on the return of premium, okay, so they have to be over 20 and under 45 if they use any nicotine products, okay? Very important to remember with that. You'll probably get a lot of questions about this. Senior Life does a lot of commercials on return of premium. It's a great product, okay? But again, remember, they're going to order medical records on this product. Face amount begins at $10,000, but here is specific increments. They can only get 10, 20, 30, 40, or 50,000 on the nose. So you're not going to get a 55 or a 43 or a $32,000. So you get my drift there, okay? So 10, 20, 30, 40, 50, okay? This is the return of premium product. And what this does is at the end of that term, they will receive a check for everything that they ever paid in to that policy, okay? This plan fits some people it doesn't, but it's there as another tool in your tool bag to pull out for folks that like the idea of that, okay? So it's like they're saving money for 20 years, and Lord willing, they live that full amount of time. The death benefit doesn't have to pay out, and they get everything they pay back in and turn around and put it in an investment account or go to Hawaii or do whatever they want to do with it, okay? So again, what we've covered today is a more specific breakdown of the products, what the limitations are with those products, the benefits of the products, and how they pay, okay? That got real specific again. You just need to look at, all you agents, look at your actual commission breakdown, and that'll let you know on the limited plans and the higher age bands or the lower age bands, okay? Any life insurance product is designed to target a certain market, and with Senior Life, you're going to make the most money when you write the actual senior market, looking at ages 60 to about 75. That's your sweet spot in this business. And the great thing is our leads. Hopefully, you're working on leads, 20 leads a week. Those leads are designed to primarily put you in front of that. We've got the term products, yeah. We've got the other stuff in case they got family members, or it keeps us from having to we don't walk away from certain things that might still be in the household. But again, that's not our thrust. That's not our focus. So the sweet spot is going to be that senior age before they get too old, and that's the product is designed to pay you the most for that without them having a whole lot of health issues. But again, That's going to be standard anywhere. So we've covered those product types. I hope this has helped you. Again, we've mentioned kind of how the payable differential, just to broad brush stroke it, to keep this video from getting too long. But as always, if you have any questions, need anything, reach out to your manager, no matter what group you're in with us here at Agents Resource Group and Senior Life, but reach out to your manager. You can always reach out direct to myself, John Tanner, my wife, Brandy, and get in touch with us. One of us will pick up the phone and answer when you call, and we'll do our best to help continue to give you the best support that we can give you in any way that we can. All right? We want you to win. We want you to be, do, and have more. Senior Life's the vehicle for that. Agents Resource Group is the group to give you the best support on that journey to great wealth, great financial freedom with Senior Life. Thank you for all that you do. And again, don't hesitate to reach out if you need anything. Thank you. God bless.